Hey traders, Parker here with a quick update on the sector rotation indicator. As you can see in the labels, you can see a lot more orange than you see red, and that's because a lot of these things are starting to come back up. You can see consumer discretionary still red, staples, industrials. A lot of these things are getting ready to turn orange or coming up out of the deep red and turning orange. Energy is still green. Utilities and healthcare turn yellow. Excuse me, because they're going under, and what's happening is basically money is moving again, and they're really moving to a lot of these beaten down sectors that a lot of people have been talking about. So let me pull up this picture of the sector rotation thing real quick. We're still in this part where we still have rising interest rates, and shares are still falling, even though we're seeing a somewhat a small rotation out of the defensive names and into some of these other beaten down names for these small pops ups. As you can see, we still are over here, and what's going to happen? We're going to probably still be going in a downtrend, and we're going to get these small pops, but rallies, but they're going to lead to further downfalls, and hopefully we don't enter in a recession, but we still may. But that all depends on the Fed and if they continue to aggressively hike rates. But as you can see right now, bonds are going down, defense sector is going down, and high quality assets are going down as well, like Apple, Nvidia, Walmart. A lot of these big names, staples and stores and things that we actually need. Those stocks getting hit as well. So let's bring it back up to the sector rotation. And some of these are coming back up. Materials is coming back up. The 20-year bond is coming back up. Communication sector is coming back up. Semiconductors is coming back up. The Russell small caps are coming back up as well. And you got biotechs coming up, and you got gold as well coming up. The S&P 500 is still in the red. You watched my video earlier today on the irregular body indicator. That's what I have on the screen. I also have the version pointer controls, and that's what this pink line right here is that I was referring to earlier as a pointer control. It's a version pointer control where there has not been a close that breached that on a day. When I say breached, it hadn't closed under. Like this one, this close breached it on a day, and it stayed under there. So it actually breached it. So this version of pointer control is no longer valid. But this one still is. And I drew this white line from the actual volume from the volume profile. So I'll do that, but before I do that, I'm gonna have to take this off. But you can see right here, you have uptrend. You still got an uptrend in energy. You got a downtrend in SPY. You got divergence, defense, and that means defense is going up while offense is going down. And you got a downtrend in offensive, and you got a downtrend in defenses. It's still saying it's a downtrend in defense because it's below its average. And there hasn't been a significant amount of time for it to actually make a actual uptrend, but it did turn up, or it's rising against the offensive sector. And you have the VIX here; it's doing this thing. It even though there's not an uptrend. So I thought it was going. Yesterday when I was looking at it, had a uptrend in the VIX, or divergence in the VIX against the SPY. But the VIX has actually come down as well. And you can see right here, it's yellow, which saying that it's coming down as well. And the VIX, I have it actually displaying opposite the other labels. So red in the VIX versus red in the other labels. The higher the VIX goes, the more deeper red the VIX will get, while the other labels, other ETFs in this sector rotation, the lower they go, the redder they'll become, and the higher they go, the greener they'll become. So, and this is our sector rotation model right here, and you can see the SPY has made some moves up, but you can see it collapse right back down. What's in this downtrend, but it came back up, but it's not significant. And when we look at the RS numbers on there, you can see the RS number for the SPY is 9.14, and that's one of the reasons why I was making new lows. So I'm gonna go ahead and take the sector rotation off of it, and we're gonna look at it from the point of view of the irregular bodies and the pressure, volume pressure, and pressure labels. So let me move that. And let me switch this to 21. I'm gonna leave this at. Well, I have the day length. I do that. I leave the day. I do because I'm working on the daily chart. I put my length average for 5, and I do my day length for 21. And just gotta give it a second while everything comes back up. And I want those labels to not be in there together, because eventually they're gonna just cover up the price, and I need to cut the year on when it comes to the labels. And I'm going to set the year for 3 years, and I'm going to set the week to 3. That's going to give me the same thing this is going to give me. But I definitely want to change this. I'll leave that alone. I'm just going to leave everything that I have set the way it is. I'm not going to change anything. I'll just leave it like that. We can look at it from this perspective, and I'll get the volume profile in a moment to show you how I drew those lines. And one of the other things I've been working on with the volume profile, and in 3 years, 3-year average, there's been 26% more buying than selling. If you watched my video earlier, when I put it on 1 year, it was like 96% selling, average selling than buying. And you can look right here for have the bar average on the daily set for 5. There's been 9% on average more selling, and on the day 21-day period, on average there's been 7% more selling. And I have set the weeks set for a 52-week average, and on the weekly it's been more 3% more selling on average than buying, so on and so forth with the monthly as well. And it's probably showing 3% because I didn't change it. It's probably showing 3% on a month and because I didn't change it here, because I have the week set for 52 and I have the month set for 12. So I'm going to set this to 3. I'm going to set this for 3 as well. And it's going to should show me the same thing. It's going to give me something different, but when it comes to, yeah, it actually shows something different, so that's fine. But that's not my main concern. My main concern is where we are in regards to how I set this up earlier, but it's just more selling than buying that's been going on. And when I stretch it out over this 3 years, you can actually see these point of controls where they are. And I have the point of control set for monthly, and this is a daily time frame, but this version point of control here is holding up really nicely. So I'm gonna do one other thing that I forgot to show this in the video when it comes to the irregular bodies. You can actually put these on the volume average, and it'll give you a different perspective of supply and demand zones or irregular bodies according to an average versus the traditional way and Cooling put it out there. And you can see it works out pretty good. And it's saying right now, this whole entire area before this one was made, it was support. And it came down here and it's support. So it's going to have problems coming back up above this area. You can see right here, this is all just weak volume right here. And it's actually below average or ultra low volume with these two candles right here. Even though price was able to come up, you can see that it was really just a weak bounce. And you can see down here with this magenta triangle, it's telling you there's a trap. that the this candle body is bigger than the preceding candle with less volume. So it's really just a trap for anybody who's trying to go long. You need a volume confirmation. Like this volume was confirmation that, hey, it could be a move up. And this is ultra high volume. So I'm expecting a move at least back into this cloudy area. Back, hopefully back above 400. And I like to mark out those whole numbers with cyan to give me some and this has really been a line in the sand as well when it came to the S&P 500. So let me get the volume profile on, and let me put show you how that got those lines that I have drawn out, those white lines I have drawn out. I'm just gonna use the regular volume profile. I'm not gonna use my own. So we're gonna set it for the chart, and we're gonna set it for 68 and occupancy of 20. I'm gonna cut these all off because I really don't care about any of those. Or yeah, we don't care about any of those. All we care about is actual volume profile, and I have it set for chart. And you can see right now it's pretty messy, but you can see how those lines actually line up with the different edges of drop off for the actual volume, for the actual volume profile. So I'm gonna start moving this. I'm gonna push it. I'm gonna say 5 years. I'm gonna do a weekly chart, and you'll start noticing a difference. Because I'm doing a weekly chart, I'm gonna switch my irregular bodies back to the original versus an average, because I would have to change that to a week. Find out what is a weekly average for. You can see these version pointer controls changing too, because they're working on volume, and they're changing according to the volume for that period. And this is what you get for the weekly, but I think ultimately I wind up using the month, and I was able to draw these lines actually from the volume profile. You can see with this ledge right here, I have that line right there, and I came down to these other ledges, and that's where I got these white lines from. And you can say I kind of overdid it in this area, but I was really just trying to figure out what ledge, potential area where price might come to and bounce. So the way that I was watching the woman do it, she did it basically like that. You actually have another one right here for this next ledge, but this is what's consider a volume cluster, another volume cluster, another volume cluster. And this area right here, if you can look right here, this is the point of control for the actual chart based off of 5 year monthly chart. And it worked out pretty good. And there's my version point of control right there. You can see SPY's just sitting on it. You have 2 point of controls right here, 384.99 and 382.24. So this right now is where the SPY is, and hopefully it actually can pushes back up. But you can look right here, and you can see you got 2 irregular bodies as well right here. So, and you have this big area, this previous area also of support or resist. Well, I'm gonna say it was resistance that became support, and you have this other area of support down here as well. And the other thing, I think, did I show that? Yeah, I did show that with the volume irregular bodies. You can cut on the other clouds, and just saying the previous clouds that were there, and you can see this area now is showing that, hey, this was the previous area of resistance, but it's acting as support now as well. And that's pretty much all I really had to show you today. I can go back to the flex grid. And this is one of the other things I forgot to show you on the irregular body indicator. I actually put this in the package as well. All it is just a price channel. It comes standard on Thinkorswim. But I just made some changes to it. And I think I said, yeah, 21. Yeah, it's set for 21. So I made a couple of changes to it, and you can see when the price channel is actually broken, it goes away and it'll come back. The same situation here, and it really offered a lot of support right here. It shows you where area was support right here, because it finds either the highest minimum, or the lowest minimum of the candles for 21 period, or it finds the highest max for any of the candles, for the candle bodies, and it gives you an area of resistance. But right here show the area of support, and you can see the same thing here. It's showing the area of support. But like I said, my channel is price channel is just different, and I added a midline as well. It changes colors according to where price is, and in accordance with the range between the high and the low. And we can go right here, and this is how the S&P 500 basically ended the day. You can see how as it was coming down, it was making these areas of support and resistance with the irregular bodies. And that's why I really wanted to point out here with the irregular body indicator. This is on a 10-minute time period, so you're gonna get a lot more. Boxes for, or you're gonna get a lot more. I'm gonna call it noise on this 10-minute time period, and this time period over here is an hour, so you're gonna get less noise. And I have it set for 8. But I have it set for the original as well. So it was stayed pretty much yesterday, Thursday, in this box right here. Was able to come above, but this huge candle right here has high volume on it, and then you came into this ultra high volume area over here. Excuse me. And it was able to push back above, but it's still under this area where it was support, now becomes resistance. And we can, one of the things I wanted to change this to a 6, and let's see how it came out, because I use a 6 period average on a 10-minute to give me an hour's worth of data. It did change it a bit. You can see right here how everything has changed, and you don't have that big block right there. But I really like the way this irregular body indicator came out, and right now it's showing all the support. And when it comes to the hourly chart, I usually use just 8. I use 8 hours, and I'm going to put it on the above average. And it really turned out awesome on this one. You can see how it still gave you that range, and it gave you this range within that range of volume, irregular bodies. But it turned out really good, and it gave you this area of support, and it gave you that area of resistance. So Monday, when I'm looking at this, I'm going to be looking for this area right here to be held as support, now that this hourly candle actually was able to break above it, and hopefully try and make a run back up to this 394. And there should have been another one. So that was my daily. This is my 10-minute. And this is the daily, and this is just a flexible grid on Thinkorswim. And that's pretty much going to be the end of the video. I just wanted to show you a few more features on that irregular body indicator, and what I'm looking for. And let's go look at Tesla real quick. After they got kicked out of S&P 500, I don't know if I'm that bullish on it anymore. So I admit I was wrong on Tesla, and it's looking rough for Tesla, but it came right back down to this area of support that had previously found. And on my Fibonacci levels, it came down to the 654 and 71 cent level and stopped, and it was able to get back above this 100 level, which it found right here with that initial drop in February. I think that's might have been when. But these lines I drew out the same way I did with the volume profile. It might still be on here. Yep, there we go. So this is Tesla and with the regular body indicator, and these are the lines that I found with the different ledges. And I'm going to get rid of the drawings for a moment so we can see this a little bit more clear. And Tesla fell into this area, and you have 1, 2, 3 points of volume, version points of controls that the stock tried to break down below, but it couldn't, and so it's sitting there right on top of them. And I'm going to cut off those other additional clouds, and let's look at it for what it is. So it was really in this big area right here with all these version points of controls, and now it's sitting right here on these 3 version points of controls. But it might be able to hang into this area. Otherwise, it's probably going to come back down to this box right here at 5. The top of the box is 624. And today we got all the way down to 633 on Tesla. So I don't think I'm bullish on Tesla anymore, but its price is definitely attractive for the long run or long haul. For Tesla to go back up. And one other thing I wanted to show you, I know I said this is going to be the end of the video, but we can go back over to these. This is the watch list for the different ETFs, and I'm going to put it on just change, and you can see XLV is going. Actually, this is the daily change. I'm not sure what's going on with my labels. It's probably because it's after hours that these things are acting like that. But anyway, they weren't acting like that during the day. But XLRE is up today. That's why I was telling you the 20-year bond, IBB. I think this is the semiconductors. XLE is slightly up. That's energy. And you see the Dow Jones Industrial Average actually came up today. The VIX is up. And these are the different ones that are up today. Bitcoin kept going down. But these are the ETFs. And you have some of the bonds in there as well. And I put the VIX in there as well. And this is just my indication of what's going on. And this watch list is just my daily watch list. It just comes up with this scanner, and it's called the A1 Open scanner. All it looks for is the stocks with the greatest percent change, and then I sort through those by volume, and you got to look at really IMAX with the greatest percent change on the greatest change. So we can look at IMAX with the indicator as well. So this is an IMAX. This is a pharmaceutical company. So it's not going to give me a whole lot of data. But we can just go right here. You see the build up right there. And you see this big box of range where all these candles were dipping down into. And it finally was able to overcome it. But you can see how it just smashed right back down. And it took a whole lot of volume to push it down. Even though I don't have the little my volume on there. And yeah, you can see right here it took a whole lot of volume to smash it down through this area right here. Even though it's made that new box right there, this area is still valid because it hadn't been breached below, but it got breached below with all this volume. And that's going to be the end of the video. And like I said before, I appreciate you guys taking the time out to watch and listen to what I have to say. If you haven't already, please like and subscribe. And so you can get the most updated information and videos, and when I put out free indicators as well. If you have any comments or anything, please leave them in the comment section. And I wish you the best. Have a great weekend and stay safe out there, and God bless.